Good day, everyone. Welcome to Global Government News. Today is August 19th, 2010. Time is flying, and we keep hearing that the economy is going to get better, yet it doesn't seem to be. This first article is titled China Slashes U.S. Government Bond Holdings by the Largest Amount Ever. This is from a couple days ago. It says China began reducing its holdings of U.S. government bonds again in June, and in fact cut its holdings by the largest one-month amount ever. According to Bloomberg, the nation's holdings of long-term treasuries fell in June for the first time in 15 months, dropping by $21 billion to $839 billion, a U.S. government report showed yesterday. I covered that article in the last economic news video, so I'm not going to keep reading it. The link will be posted. This article is titled Western Profits Wilt on China's Surging Wages. Rising wage and production costs in China are eating into the profits of Western companies and may soon set off an exodus of multinational companies to cheaper locations. It says a report by Credit Suisse said the vast majority of U.S. and European companies in China are expecting a, quote, margin hit over the next 12 months and fear they will not be able to pass on the cost to consumers, with the biggest worries in electronics, clothing, and retail. The bank said Foot Locker, Liz Claiborne, and Office Depot would tip into outright loss in a worst-case scenario defined as a 20% rise in costs without any pass-through to customers. It says the U.S. industrial giant General Electric raised eyebrows in May with plans to shift production of its hybrid water heater from China back to Kentucky next year after securing lower wages from U.S. workers. The company cited the narrowing pay gap, lowering transport costs, and shorter delivery. And this is the restructuring of the economy. Like I said before, not the recovery. It's the restructuring in which Americans are going to work harder for less. And if you think China's, going to be living like us, well, they might, but it's not going to be for a long time. It's just going to go back and forth. So that globalist companies can just exploit low wages. And it basically goes on and says, survey of executives found that 55% of foreign firms in China could relocate plants to Bangladesh, Vietnam, Indonesia, or other low-cost regions relatively easily, though it would be costly. This next article is from moneyandmarkets.com titled, The Bond Market is Signaling Trouble Ahead. This is from August 18th, 2010. And it says, my outlook for the economy and the stock market has steadily and significantly deteriorated since March 2010. That's when monetary indicators started to signal renewed emerging stress in the financial system, and leading economic indicators started heading south. The stock market was richly valued in terms of dividend yield and price-earning ratios, and I predicted a topping formation followed by a new bear market. Since then, the market has moved nowhere. Price movement since last October looks like a well-formed topping formation. Longer-term trend following instruments like the 200-day moving average have turned sideways, thus confirming the topping process. It says the stock market is on the verge of a breakdown. The most likely scenario is a breakout below the lower boundaries of this topping formation. Below the 1,000 level, the S&P 500 reached on July 1st. Such a move would definitely make clear that April was the high for the huge bear market rally that started in March of 2009. And he says already the bond market is conveying an important economic message. As you can see on the charts below, the 10-year Treasury bond yield has dramatically declined since early April. In fact, it says the 10-year yields are as low as December of 2008 during the depth of the severe economic and financial crisis. And he explains this pronounced slump in yields is sending a frightening message, is anticipating a recessionary economy. That message fits perfectly with other leading economic indicators and with my own big picture economic model showing that the economy is again on its way into recession, and the picture is getting clearer by the day. He said, as I've said in the past, money and market columns, every recession in history has been accompanied by a severe bear market, and I wouldn't be surprised if the 2009 March lows were broken at some point during the next 2 years. And this is Bullard says Feds may need to buy more treasuries from August 19th, 2010 from Reuters. Says the Federal Reserve may need to ramp up its purchases of U.S. Treasury debt if price levels in the U.S. economy continue to show signs of softening. St. Louis Fed President James Bullard said on Thursday. Bullard said such actions were not yet warranted given expectations for a continued economic expansion, but he added that if further signs of easing price pressures were to emerge, the central bank should not shy away from the action. His comments came on the same day as a very weak batch of data renewed growth worries, sending stocks sharply lower. He says, should economic developments suggest increased disinflation risk, purchases of Treasury securities in excess of those required to keep the size of the balance sheet constant may be warranted, he said in prepared remarks. And due to the, quote, unusually uncertain situation and a significant policy shift last week, the Fed announced it would begin using the proceeds from maturing mortgage securities in a portfolio to buy Treasury notes, an effort to prevent monetary conditions from slowly tightening over time. This next article is from Spiegel Online International. It says tensions rise in Greece as austerity measures backfire. The austerity measures that were supposed to fix Greece's problem are dragging down the country's economy. Stores are closing, tax revenues are falling, and unemployment has hit an unbelievable 70% in some places. Frustrated workers are threatening to strike back. Yeah, and they have police firing rubber bullets at them, actually, as we speak. The Feast of the Assumption of Mary on August 15th is the high point of the summer in the Greek Orthodox world. Here in one of the country's many churches, believers pray to the Virgin Mary for mercy, with many of them falling to their knees. It says this dire prognosis comes even despite Athens' massive efforts to sort out the country's finances. The government's draconian austerity measures have managed to reduce the country's budget deficit by an almost unbelievable 39%. After previous governments have squandered tax money and falsified statistics for years, the measures have reduced government spending by a total of 10%, 4.5% more than the EU and IMF had required. The problem is that the austerity measures have, in the meantime, affected every aspect of the country's economy. Purchasing power is dropping, consumption is taking a nosedive, and the number of bankruptcies and unemployed are on the rise. The country's GDP shrank by 1.5% in the second quarter of this year. Tax revenue desperately needed in order to consolidate the national finances has dropped off. A mixture of fear, hopelessness, and anger is brewing in Greek society. It says unemployment rates up to 70%. Goes on, it says sales figures dropping everywhere. It says things are starting to simmer. This next article is from economicpolicyjournal.com. Soros bailing out of U.S. market. Billionaire trader and political manipulator George Soros is clearly not optimistic. The latest SEC filings are out on the Soros hedge fund, Soros Fund Management. Between the end of March and the end of June, Soros lowered his stock investments from $8.8 billion to $5.1 billion in the fund. He sold most of his positions, over 95%, in Walmart and JP Morgan Chase and Pfizer. His biggest position at the end of June was in gold ETF, which accounted for 13% of his equity portfolio at $638 million. Among the stocks that Soros adopted to the fund's portfolio were Akame Technologies, Salesforce.com, Netflix, and Chipotle Mexican Grill. Bottom line, he's bailing out of U.S. stocks that are impacted by the overall economy and just buying special situation stocks that are less impacted by a downturn in the economy. Moving on, this next one is from Bloomberg. Schwarzenegger orders furloughs to start after top California court rules. California Governor Arnold Schwarzenegger, or the Governator, says 150,000 government workers must begin taking time off without pay starting August 20th following a court ruling lifting an injunction temporarily blocking the furloughs. So in other words, this should have happened a long time ago. The California Supreme Court saying it would review the governor's plan stayed decisions by lower courts that had halted the furloughs. Schwarzenegger directed state workers to take 3 unpaid days off each month to save cash. The High Court said a September 8th hearing on a challenge to that order. It says down here, a union for state engineers has sued to block the plan. And I think we remember like the situation about a year ago where bunch of people that were I guess you could say they were homeless, but half of them actually had jobs. They were working poor, and they were living in tents, and I guess they'd been here. It was kind of a community that had been there for a while, and I guess Schwarzenegger had them removed and put into something called the fairgrounds, kind of a makeshift FEMA camp, I guess. This one is weekly jobless claims post surprise jump, hit 500,000. If you check checked out my last economic news video, you'll see that I included an article that was all about how these propagandists will put out how they're so surprised, not just propagandists, but experts, right? They're all surprised. They're experts in the field, but they're surprised. No, they're not surprised. I don't know who really is surprised. I'm not surprised. It says the new U.S. claims for unemployment benefits unexpectedly climbed to a 9-month high last week, yet another setback to the frail economic recovery. But hey, wait a minute. It's a jobless recovery. We're recovering. There's growth. There's just, you can have growth without jobs, right? That's what they keep telling us. Initial claims for state unemployment benefits increased 12,000 to a seasonally adjusted 500,000 in the week ended August 14th, the highest since mid-November, the Labor Department said on Thursday. Analysts polled by Reuters had forecast claims slipping to 476,000 from the previously reported 484,000 the prior week, which was revised up to 488,000. Says U.S. stock index futures turned negative after the report, while Treasury debt prices pared losses. The dollar fell against the yen. This is their number. A 9.5% unemployment rate and weak housing market are hobbling the economy's recovery from its brutal recession since the Great Depression. And always got to throw in there, it's about almost, I would say that about 20% is what the unemployment rate is. You can go and check that out, Bob Chapman or other websites. It's basically people that are still unemployed, not collecting unemployment benefits. So this number, it doesn't reflect those that are unemployed, still unemployed, and not working, but not collecting benefits. And of course, what you got down here is just same rhetoric that doesn't help anybody. It's just politics talk. The economy's poor health has handed President Barack Obama a tough challenge and put at risk the Democratic Party's majorities in the House, U.S. House of Representatives and Senate in November's midterm elections. So see, I mean, they politicize it. They politicize it. And so, and it's not Obama. It wasn't Bush. It's banks. And it's the ruling elite that sit there and basically steer our society towards a certain direction. This next article is titled Economic Numbers Point to Darker Outlook from Reuters. This is August 19th, 2010. The frail U.S. economy receives fresh setbacks as new U.S. jobless claims scaled a 9-month high last week, and mid-Atlantic manufacturing shrank in August for the first time in more than a year. Other data released on Thursday, including a lackluster gain in a gauge of future activity last month, also imply that expansion has lost momentum after a brisk first quarter. It says, though economists are cautioned against interpreting the reports as signs of an impending double-dip recession, said it's certainly disheartening news about the economy. David Rossler, chief economist at the Nomura Securities International in New York. And once again, here they go. The experts are surprised. It's not persuasive evidence that we have dipped into a recession again, but it's certainly suggestive of more serious deterioration than we had factored into our forecast. And running out of time here, going to finish up. U.S. debt prices rise on new recovery weakness. U.S. Treasury's prices rose on Thursday after an unexpected decline in factory activity signaled new trouble for economic recovery and sent investors out of riskier assets into safe haven government debt. This is Wall Street drops on signs of economy has stalled, says U.S. stocks tumbled to their lowest close in nearly a month on Thursday. At the lowest batch of data, amplified concerns the economy is stuck in neutral. More tough economic times forecasted by CBO. The U.S. economy faces difficult times ahead with chronic unemployment, slower manufacturing hurting the pace of recovery. The head of Congress budget agency said on Thursday. I'll post a link. Check. This is U.S. says bankruptcies reach a nearly 5-year high, and this is from MakeChambersLive.com. And this is something of a joke to me. 22 cities in danger of a double-dip recession. How about we're all in danger of a recession? And it's not even a recession. Like I said, it's a restructuring. You work for less. And this is the last little propaganda piece I'll cover. Billionaires who haven't taken the pledge. Ooh, these guys, George Soros, Walton family, Oprah Winfrey. They're not pledging half their wealth. You bad, bad billionaires. Thank you, everyone, for joining me. Take care.